show your ambition and kind of do what kind of makes you tick. I think that's kind of that when the content is right and you feel at home, then that also radiates to other people.
This podcast is brought to you by Fredrik Herstad and powered by Unlisted, the leading cap table management platform in the Nordics.
Hi Ilkka, welcome to the podcast.
Hello Fredrik. Hello from rainy Helsinki.
Hello from rainy Stavanger. So I'm happy to have you on the podcast. Thanks for your time, and I'm sure our listeners will really enjoy your perspectives from the VC landscape, and also understand your background and Maki VC's background. So please tell me a little bit about yourself to start with.
Well, first of all, thanks for inviting me. And I'm still more of an entrepreneur than investor. So started off once upon a time with the being a project engineer in the elevator company, but then jumped out into setting up a B2B and B2C computer retailing stores in Finland and Sweden and Estonia, and we were the biggest ones in the Nordics at one time. The company was called PC Superstore. That was then sold out just before the dot-com crash, and I actually thought that I would go and study more and become a PhD. Well, that was 25 years ago, and it's still pending. So it took 2 weeks for me to go and set up a new company. We started to do IP telephony stuff. It was year 99, and that was of course the dot-com crash came, and we luckily got funded, and it was a really tough time for all of the telephony area, and many of our customers went belly up before we got anything delivered, and especially one of our target markets, Germany, was really in a turmoil with all of the telecoms and mobile phone licenses, etc. So very difficult times as a startup entrepreneur at that time, but we were able to grow every year and got the company profitable around 96 and then 2006, and then 2007 we ended up selling it to SAP, and that was a very, very big change in my working life once I've been a startup CEO and serving pizzas and trying to figure out how to serve the coders late at night so that we can fix the problems, and then becoming the senior vice president for SAP and kind of be very high in the hierarchy, and even my key working for the executive floor where the CEO is, which seemed to be a big thing in a company. So kind of going from totally one end to another, and definitely the SAP was not me, because I'm more an entrepreneur, more an early stage person, but it was extremely interesting 3 years, and I learned a lot and understood a lot of things, how the big companies work, and it was I'm very happy that I was there. But then after 3 years, I kind of decided that I don't see what to do next here, and then jumped out. And my daughters were born, twin daughters at that same time, so I was at home with them for some time, and actually then ended up being kind of some would say unemployed, but let's say that I was living out of balance sheet for 3 years at that time, and then was kind of sucked into the Aalto University Entrepreneurship Society, and helping the youngsters to get things off the ground, and was on the Startup Sauna Accelerator, the head coach for 2 years, and then we also took over the slush operation with the Aalto S people, and then the slush started to grow from the 1,000 people operation into something that eventually was 25,000 people event, and still going strong. So that was a super interesting time. Then 2013, one of my old school friends was calling and asking that do I want to join in a venture capital company, and well, it didn't take more than one meal in the McDonald's where we were talking that, okay, would this be an interesting thing? And well, I was sold and moved to the dark side. So, and now I've been there already over 10 years, and that's a kind of a feeling that, okay, finding and understanding the new things that are popping up and how the things are evolving, and then working with the super talented entrepreneurs, young people, I think that it's really a privilege, and I really enjoy doing the early stage stuff. And then that was the company was in venture at that time, and I was one of the 4 partners there. And then the 3 other partners wanted to do a bigger fund and not be maybe in the writing the first checks to companies. And then 2017, I split and then set up Maki, and we started investing 2018, and now we are on the Maki route already for what we've been investing for 7 years, which is quite amazing. We just started.
Yeah, cool. It's an amazing background that you have, and it's interesting because I hear a lot of VCs kind of going the same route. And it's funny when you said you built 2 companies and then you joined SAP, or like a big corporate, and joining also their kind of the management level. But then you said it kind of wasn't something for you, so you jumped off and kind of leaning towards kind of the startup system again, from a different angle, but still. So this is kind of a funny thing. Is this kind of is it like a chicken and egg thing, or like? Because you see that happens a lot. Like startup people go to corporates, they don't really figure it out, or I don't know, something doesn't appeal, so they go off to do something else again. Well, it's funny. Is that because is it because you've done the kind of startup thing, you think, or like that the world can be so much more dynamic, or is it what do you think?
At least for me, it was mostly the politics. There was so kind of in a startup, you're kind of finding a problem, they are fixing it. But in a small, in a big corporate, of course, there is so much legacy stuff, and you're playing with different rules. So kind of getting the customer problems fixed, or getting some other stuff kind of on the different path, it takes months or years, while it's in a startup, it's hours or minutes or a maximum weeks. And that's something that kind of the pace was something that I was really after. And then also kind of some novel innovations, because then kind of at the same time was helping out some friends that were having a new companies, and it was so fun to kind of come out after trying to solve the problems like for 5-6 hours, and you figure out that, well, we had a whole evening, we were just kind of solve these things and getting really excited, and then kind of wondering that when did I have last time this feeling of going to work and having a creatively nice business card and a good title. And actually the final nail was that I realized in the on the last year that I was there, that I hadn't seen a real customer in 6 months. And that was kind of the last wake-up call, that now I have been just doing all of different kind of different internal stuff for a very long time, and actually that's not the thing that I should be doing. I should be with the customers, I should be with the solving the problems and maybe selling something. And I think that was kind of the thing where I decided that, okay, now it's time to do something different. Yeah. And I luckily had the opportunity to kind of jump out without thinking that I need to have exactly something new at the same on the next day.
that's a privilege. Like after succeeding with a startup, that you have some capital to actually have time to think and understand what is it that you really want to spend your time on going forward.
Indeed.
So going from kind of building startups to corpus to then later joining a VC fund, what do you think was the biggest change? Looking back, what was the biggest change from going from the company side over to the investor side? Could you elaborate on that?
I think that that's actually an interesting question. Kind of the not so funny part on the VC side, of course, is that when you're in the very early stage and you have a lot of companies, that there might be so many problematic things on the table at the same time, because oftentimes it kind of the easy things are not coming to your attention if you are a board member and kind of a part of the team. But I think that also kind of understanding my own personality from the other side, I'm really kind of a manic person. That when being a entrepreneur, it was really kind of a holistic thing, and I was really deep into the company and building it. And part of the show, I think that then being an investor and kind of having to jump from one thing to another, I think that the good part is that you don't go that deep, that manically into some companies. And then I think that the really nice part is that being able to kind of see different things in different companies, and being able to kind of crossbreed even from different industries, the best practices, and kind of being able to kind of help the companies. Because I think that the very early stage investor, at least I feel that the best feeling and the best way how it works is that you're kind of an extension for the management team, that kind of you have one foot inside of the company and 1 foot outside of the company, that you kind of really understand intimately what's happening in a company, but still you are not in the everyday business, so that you can maybe ask the stupid questions from the founders then, that why are we doing this and that because the market doesn't support it, or something that you can kind of look it from a little bit further away. And I think that that you are part of the team if the CEO calls you 12 o'clock at night and tells about some problems, then you know that you're kind of a part of the team, and you're not the guy that people try to avoid talking to. And I think that that's exactly the right position, that you are kind of on the same side building the companies.
It's a good place to be, and I think that's the beauty as well with the model. Like, you can really help if the companies allow you to help. You have so many other references, like, because people have done it before, a lot of the things anyway, right? So there are some common pitfalls and common good practices so that you can apply across companies. But there's one paradox to this, and that's like, once you're an investor, like, first of all, they want to make sure they kind of keep you happy and secure more capital. That's one thing, but also having to use the best that you can offer, which is your advice and your network and your perspectives. So do you often or sometimes feel that companies kind of, they're not that open with all the problems, or do they share openly, like, these are our problems, kind of help us, please?
Well, that's kind of the, there is oftentimes, and I think that there is also kind of in the best companies, there is kind of a lot of sharing, and kind of the board should be there to help you, because I think that that's kind of the realization that the investors in the space have seen most of the movies already 100 times, that and many of the things that might feel really problematic or difficult for the founders, actually those could be the same things that 50 other founders had already in their journey. And I've been telling to many founders that just kind of, if there is any problem, call me or send a note. I'm sure that we can figure out very fast 80% out of those issues, that those are kind of the common things, and you can get the left or right answer instantly. And then those 20% that are there, that those are the really interesting questions that then should be thought of thoroughly, that if there is not a simple answer. But I think that that's really one of the key things for working together, that also sharing the good parts, but also sharing the bad parts, because I think that everybody in this business should understand that there is a lot of hurdles, there is a lot of issues, there is a lot of things that are not going as planned. And if everybody is on a level, I think that that's the best way to go forward.
Yeah, I agree. Like, we were living in such a dynamic world, right? And especially as an entrepreneur, things are changing and a lot of curveballs are being thrown your way. And I think also being open about the challenges builds trust over time. So it's easier to one, solve them, but also understand when it's kind of really tough. Then you kind of build that understanding, and because of that trust you built up over time. Yeah. So, but then you said you went to a venture, they raised a bigger round, and you wanted to do still early phase. So the way I read that is you prefer working on the early phase company versus kind of the later phase. Could you tell something about that?
Well, I think that the one of the things that when you are in the super early, when you're writing the first tickets, then the question is all the time that I think that on that space, the question is that you need to have a very strong own view of the world and where we are going, and then kind of I like to read a lot. I like to understand a lot on many of the technologies and many things that are happening in the world. But then when you come across with companies that you share the vision with, then and being part of that kind of a story, and then when there is a story on the Financial Times 4 years later that this is a hot area, then it's kind of that's the really interesting part of the story, that you are not just kind of following others, but you are the trailblazer there in the very early stages, and that's kind of the idea that kind of building something and being part of the best teams there in the very early stages, and I think that that's the thing, and then also. Yeah, I find it really difficult to be the follower. Maybe the very late stage investors have been making much more money, and some would say that it's really stupid to be in the super early stage. But I think that this is the most interesting place to be.
Yeah, follow your heart. That's what I say as well, right?
Yeah.
And I guess it's closer to your, like, you're a builder, like you built before, and that's what you're kind of also missing in SAP, and now. And then you're closer to the builders, right?
Yeah. Well, then I think that that's true. That then the late stages for the pinstripe bankers, I think that there is not that many early stage founders on that genre.
Yeah, that makes sense. Except from kind of those funds always trading up, because you see there's a trend of that, right? You start with a small fund, you grow a bigger fund, and then you kind of trade up. You maybe start pre-seed, and you end up like Series A plus.
Yeah, well, that's always the discussion, that where you should be, and should you be growing up, or should there be different type of funds in the same family? But yeah, there is many flavors how you can do that.
Yeah. Okay. Cool. Okay. So now we've been through your journey, and now you're at Maki. Please tell a little bit about Maki. Like let's go into kind of the fund structure, but also kind of how you operate, what type of founders are you looking for, etc. So maybe start with the what would be the elevator pitch for Maki VC, or how would you explain Maki?
Well, I think that Maki, we are the very early stage fund. We would like to be part of as said, part of the journey from the very beginning, and doing tickets from 300K to 3 million initially, and up to 6 million per company. Having now the third fund, 85 million, and really, well, I think that many of our peers also say that we are working together with the founders, but I think that that's something that we can easily say that you can go and talk with the companies in our portfolio and their people, that we really try to be part of the show, and be active, and I think that we have even seen the cases where we have kind of tried to decide that we are passive, but that's really difficult for us. That we would like to be kind of
Yeah, it sounds like it.
be part of the show and kind of pitch in our understanding and our ways of thinking, and I think that of course then it's up to the management to decide which way to go, but at least so that we've been kind of trying to be part of the show and help on the way, and of course we are very Nordic and very North European, but our mandate is totally open from geographical perspective, from the industry's perspective, and also kind of on the kind of tickets that we write, there is a very, very big flexibility. So in that sense, very flexible from that corner.
Yeah. So since you have like such a broad mandate in the early days, how do you separate like the things that you want to pursue or not, or like is there any particular things that you're looking for in a company, like traits from a company or the founders, or how do you start filtering out the interesting ones?
Well, I think that's of course a very, very good question, but it's kind of always a cliche, but it really comes down to the people in the startup company. That do you feel that they are really have the ambition, have the especially the ability to execute on the area where they want to build, and then do they have the expertise, or can they get the expertise to be really good in that area? The one thing that we've been kind of since the day one a little bit different, that we have been investing not only into the software, but we have done materials, processes, and hardware also, because I think that now the world is turning that way, but I think that it's many of the success stories in the future will be kind of a combination of hardware and software, and I think that that's super exciting. Of course, they are really difficult cases typically to get off the ground, but then they are also typically really complex to copy, and that also means that once you get the things going, then it's kind of fun because there is not that much competition. And then I think that we also have the networks around, and have proven that we've been around the corner for a few times. Of course, being 10 people, we also have the older versions like me, and then the younger versions in the company that have been kind of from the day one also thought that we have the diversity in the team, that we are thinking from different sides. And actually that's also one thing that seems to be a little bit setting us apart, that we are not voting for decisions to invest into companies, that if there is one person in the deal team that is kind of adamant that some case needs to be done, then that needs to be done. Of course, everybody else has the duty and the right to be kind of punching holes into the case, and kind of try to be kind of understanding that, okay, does the case really hold water? But then if the case succeeds, then it's kind of up to the individual to go forward. And I think that's, if you're in the super early stage, if you're doing the decisions, be it with the committee, you're ending up in the middle of the road cases, and then I guess today the only thing that you can do is some AI decisions. Earlier on it was enterprise SaaS cases, but we try to diversify, and we try to be kind of also in the corners that people are not looking normally.
That's an interesting approach, and I also think that's in many cases the right way of doing it in early phase, right? There has to be something different with the company that sticks out, that you believe in, it can take to the long run. But then, so I guess what happens then really is like you then end up as an internal pitching competition. Like So if I were a colleague of yours, I would go and pitch a company that I really believe in, and I then basically become the founder to convey or convince you.
Yeah, well, it's like there is a lively discussions within the company, but I think that's exactly what there should be, and I think that's also that's how you really get good decisions when you have the kind of also internal challenges, and but then I think that if it would be always so that there is a votes and all of the old school guys always say no to everything new, I think that would be exactly the wrong way to do that.
Yeah. Okay, so in your case, if you're doing it this way, so how long would it usually a case take? Like so if I were to pitch unlisted to you, and then and you saw the pitch, and we had the first presentation, and almost from there, how long would it typically case or investment decision take from the first meeting to kind of a decision was taken, given that the first meeting was an actual kind of a pitch, not just kind of a check-in or introduction?
Yeah, I think that's also depends on a lot. Typically, the process is maybe 2 weeks to a month, but the fastest decision that we have made was maybe 3 hours. And
Wow, that was during slush?
nope, that was just yeah, and it wasn't late at night; it was during the day.
Okay, wow,
and
interesting.
And then maybe the longest ones have been talking with some of the professors in the university, and then kind of understanding that there is some super unique science that's about to be kind of put into a package, and those discussions have been taken for a year, and then building together the team, that because typically on the university originated cases, the technical side is and the science part is really in a great shape, and then anything that comes to sales and marketing that's non-existent. So then building together the cases also with the technical team, so that we get also the sales part there.
By 3 hours, then I suspect they already had a term sheet. There was a deal closing, something that you wanted in on.
Yeah, it was a kind of a thing that yes or no.
Yeah, but you usually the first check-in, and you can take the lead. Usually, do you take the lead?
Typically, we take the lead, and typically we also sit in the board and kind of be part of the everyday life of the company as much as the founders feel like it. So, but yeah, we typically lead.
Okay, so now you kind of talked a little bit about companies that you do invest in and look for. Is there any type of companies that you would not invest in, or any trades that you that would be repelling?
It's the one thing is the kind of a life science cases. If you go into the medicine, that's kind of a totally different sport, and maybe that needs a lot of money, and I think that the risk profiles are even higher than in a traditional early stage venture capital, which is already very high. Then anything on the medical side that goes inside of the human body, I think that's kind of against from the regulatory point of view also very difficult. So that kind of feels that it's not in our territory. We have also said that we don't invest into games, but then once in a while there just comes such a magnificent team that you need to be investing. So it's kind of the generic answer is that we don't invest in games, but we have made some exceptions.
Yeah. Okay, and then on the flip side, what would be the ideal company? So if a company pitches to you and you think, wow, we need to be part of that. So what would be the typical traits that you would look for then?
Well, that's there is so many different ones that it's so difficult to say on that one. But I would say that maybe if you're kind of you have the perfect team with crazy ambition and superb skill set. But then if you're looking on the product side and on the market side, could take an example that now, like for example, in 2014, NVIDIA came, or 2013, NVIDIA came with their first GPUs that were kind of kickstarting the AI boom, and then kind of all of the AI stuff started. I was making my first machine learning investment 2014.
Wow.
But kind of that in that kind of a disrupting event where somebody is bringing something into the market, or there is a breakthrough, and which opens then other markets, like the NVIDIA GPUs opened the AI market. And then if there is some interesting companies that are building on that new space that which is kind of unconquered, I think that that's interesting. On the gaming side, there were similar moments when the iPhone came and when the iPad came. And like you could say that the Supercell was really, they got the really good help when they were they were one of the first ones to build really good games on iPad. And then Apple was promoting them. I think that today, if looking similar type of things, is that on the quantum computing side, I think that I would hope that in 2, 3, 4 years time, we are at the stage that there is a really good kind of a first level quantum computers with which you can actually calculate properly, and you get the quantum advantage or quantum supremacy out of them. At the very date when that kind of a stuff or that kind of a computer is available, of course the question is that where's all the software? Because you need the software for the computers, and then whether it's a trading algorithms, or if it's a marketing retargeting algorithms, or it's a computational fluid dynamics or whatnot, I think that those are super interesting moments that if you can understand that how the market works, and then be there together with the founders in a market that opens up, and suddenly you are in a really a nice ride.
So basically, when there's a big shift in the market, that opens up for new opportunities. So you wanna position yourself to win on those new opportunities. And I guess that's the beauty of your model when you can kind of invest a bit broadly. And I guess one of those now is AI. And everyone is talking about AI, and we see, most venture capital money flows into AI these days. So how does that fit into Maki? Like, has AI changed the way you invest?
I think that, well, there is several cases that are on the AI front, and like said, already 10 years ago, I made my first kind of AI investment. At the moment, I think that, or I could say that I'm actually quite afraid of investing into software only, or in a very kind of a software driven cases, because the AI has been going forward so fast. And the question is that how fast and how good the platforms are in a year. If you're looking like a cursor and how much code and with the quality you can churn out already today, and what it was 6 months ago, and when the company started 2 years ago, I think that they were still doing it more or less the traditional way, and companies that are now starting it are doing it very much AI assisted. And then the question is that, okay, what is it in 12 months from now, that when you build that, if you're building something now that takes 2 years, if you start a year after, are you ready at the same time, because the tools have been improving so much? And I think that's a really interesting thing. Of course, there will be on the AI front, there is a crazy amount of good companies that are created, but I think that at the same time there is a crazy amount of companies funded that may not be the ones that should be funded. So it's kind of a super hot, and at least my advice also to to founders that are maybe thinking that what's the next frontier that they want to be in. The AI is of course super interesting, and if you have a very strong view that what's happening next, it's very interesting, and then you should go that way. But I think that it's good to remember that there is also life outside of the AI bubble, and there is a crazily good markets around and all around, and I think that many of those are overlooked at the moment, and I think that there even could be better opportunities in some other parts.
I wanted to, like, we talked about, you said you raised the third fund. Could you say something about the different kind of the fund sizes and kind of the stage where they're at, and maybe how many investments you've done?
I think that we've done like roughly 60 investments at the moment. The first fund we started investing 2018. That's it's not has not returned the kind of a DPIs, i.e. it hasn't returned the massive returns to the investors yet, but now there is very nice companies in the pipeline that are growing, and it's kind of getting in a mature state that we are expecting to see then some exits coming most probably next year and year after that, when the fund is on the 8th and 9th year. And of course now looking at the COVID times and then the Ukraine war, it's been kind of for 5 years that was kind of a turmoil in the market, and that you can really see that many of the companies kind of lost maybe 2 years on the way. But yeah, the first fund starts to be in a nice position. The second fund, there's been actually now this spring there's been several really nice funding rounds. So there is a good bunch of companies that are scaling up at the moment. We have there also there's actually 3 companies that are building factories, which is also super interesting, super capital intensive, but also a little bit slow. So they will take the full 10 years to be mature companies, but it's really nice to see them also all being funded and all being going forward really nicely. And of course the third fund is a year and a half now since inception. So there is the first follow-on rounds are coming, and it's still very early stage, but I think that super exciting companies, and also kind of going from the AI agents to some really complex algorithmic companies, all the way to heat pumps, which is very much industrial stuff. So also very diverse, and I think that these days, which are quite turbulent, it's also really good that there is kind of a different type of companies in a portfolio from the our investors' point of view.
And you're still investing from the third fund?
Sorry, yeah.
New companies?
We are we've invested into 11 companies from the third fund now, and we'll be investing 20, 21, 22, 23 companies. So there is half of it left.
Yeah. Can you say something about your kind of follow-on model? I assume you do similar to other VCs. You deploy the first batch and then you do follow-on rounds. Do you have a kind of a spoken practice around that, or?
Yeah. Well, it's the 1/3 of the fund is invested into the initial tickets, and 2/3 is reserved for the follow-ons. And I think that's really important from the founder's point of view, that we have money to follow things. There is oftentimes situations where you need more money that you anticipated while everything is not going as planned. And of course, then we can be following or it's easy for us to follow and to be the corners for the following rounds. And also then from the fund perspective, those companies that are going the fastest, then we can deploy maximum amount of money on those ones.
Good. Yeah, I think most founders can relate to that. Things are taking longer than you think, and you might need more money than you think. So
that's the normal thing.
Yeah, and on that note, so since you're kind of in the early phase, what would you say is the most common challenges the founders meet during that phase?
Well, I think that of course there is various corners on that one, but if you're thinking about the fundraising, I think that one thing is that the kind of having the wrong, starting the fundraise with the wrong amount or going too high. That if you're already making money, but the numbers are not supporting really big round and still kind of insisting to go there, sometimes it works, but actually many times we have seen that actually if you're thinking that you would like to raise, let's say 7 to 10 million, but maybe your numbers are not exactly supporting that, or the situation is such that you're kind of in between things, that you could say that okay, within 12 months you could easily be there in the 7 to 10 million range, but you need to raise now. That instead of going there and going out to the investors and say that okay, we are planning on 10 million round, you could maybe go there and say that okay, we are planning on 5 million round, and do kind of a smaller one, and then if you get an oversubscription on that one, then it's much easier to work from that and raise the valuation, and also raise the size of the round if you get a lot of interest, rather than try to kind of really shoot to the moon, and if it doesn't work, then you might end up with nothing, or you end up with something which is very unfavorable for you. And I think that that's something that we have seen quite many times.
Yeah, that's often a challenge, and I have two follow-up questions on that. One is, like, at that point of time, have you already talked about the terms? Are they being open about the valuation when they come and ask for amount of money, or how often do you come with a term sheet, and how often do they disclose this is the type, this is the valuation, and this is how big round that we want? Can you say something about that first?
Well, I think that if you go out and say that this is the amount of money and this is the valuation, and please submit your term sheets by next Thursday, then you better be so very sure that you have a product that people want to buy. And I think that those are fund rounds if the company can do that. But I think that there is also oftentimes the situations where you really definitely cannot see that easily when the fundraise is starting, that okay, which way you really go. And then I think that it's of course better to just go with the amount of money, and then see how the things evolve, and try to get as many term sheets on the table as possible, so that you can then talk with the people and understand that what the offerings are. And I think that when you mention the terms, I think that that's also important to see, that I think that many times I feel that the highest bidder is not the best one for the company. That really try to understand that what are the terms, and what is kind of the DNA of the venture firm that's offering you the money, so that you get a partner that fits to your purpose. And if you're just looking at the money, you might end up in the difficult situations.
Yeah. So then basically, like, you see the companies go out with an ask and saying like, we're looking for that amount of raise, and then if they build enough traffic and a lot of VCs or investors interested in doing, like, investing, that they can kind of expand around, go bigger, kind of instead of going for that bigger amount immediately. But how often do you see that people is actually increasing, or companies increasing that round because they can, versus kind of just sticking to the round that they initially set?
Well, that's the question, that if you can increase the valuation also at the same time, I
Of
think
course.
that then it's a very, very easy decision. But then it's always the question that the situation. I think that that's something that should be discussed very thoroughly also within the current investors and with the team. That okay, what's the situation of the company? That how much money do we really need, and what would be a kind of that if there is an option to get little bit extra and little bit extra runway if things are not exactly going as planned. I think that oftentimes that hedge should be taken, because then it's really expensive if things are not panning out as you planned, and then you need to go and be in a panic raising something.
I agree, but the paradox to this is like once you've a lot of investors would also often ask, what is the valuation, or try to get that information out of you. So kind of once that is on the table, it's really hard to take that other discussion afterwards, right? So that's the paradox into this.
That's the really the art of the negotiation, that how to
Exactly.
how to get the package together so that everybody is in the end happy on the end result. I think that they are typically quite lively discussions.
Yeah. Since like you're from Finland and you have Slush in Finland, and you've been a really important figure in the building these Finnish startup ecosystem. So I want to kind of dig a little bit into that, because you on the side, as you've been growing kind of the companies, or at least being on the investment side, you're also being involved in the ecosystem or the different foundations. Could you start by explaining your role in those and what they are?
Yeah, well, we started on the, well, I think that thinking about the Finnish ecosystem, it's been very much kind of growing around the Aalto University's entrepreneurship society and people there, and especially the young people there. And I think that it started from there was the Startup Sauna Accelerator once upon a time, and that was kind of the vehicle around which there was all of the kind of young entrepreneurs were gathered, but then also the angel investors and then the venture funds and everybody else interested on that. So everybody was kind of helping and pitching in as part of the Startup Sauna, and then the kind of the Slush movement came, and of course then everybody was kind of supporting that how to get Slush off the ground and use their connections and networks to get the A, funding, and B, of course, all of the relevant people around the world to join. And I think that has been very successful. Then I think that one of the interesting parts was really the setting up the funds, because we were thinking once the Startup Sauna and the Slush started to grow, that how to, or what's the governance structure, because it cannot be part of any governmental body. I think that the universities are also the wrong place, because their clock cycle is also different and their focus is different. And if it would be private, then there would be the people that are owning it, and then there would be the other people. So it wouldn't be kind of a common thing. And we ended up setting up a foundation. And I think that has been going really nicely, that there's the kind of a gray eminence in the background, the foundation that's owned by 57 people, and all of these different initiatives can be owned by that. And then of course that body is very little governing how to do things, but it's kind of the solid background there, and owning it, and it's owned by everybody, but it's owned by nobody at the same time, so everybody can pitch in, and it's kind of a common grounds for all of the people around it, and it works really well for this kind of events and student led stuff. But then there was all the time I was the chairman for the foundation for 6 years when we set it up, and for Slush also at the same time. And during those times, there was always the questions also about the political things, because of course when the startup ecosystem evolves, there is always the questions on the legislation on different areas, etc., that you should be also taking stance politically on many things. And I think that kind of a platform is totally wrong for it. And then 3.5 years ago, we ended up setting up another foundation, which is a startup community, where there is all of the key investors and especially all of the key startups, plus then a lot of small up and coming startups are part of. And a purpose for that other foundation is to be the voice of the community, so that we can take political stances. And the idea is that we're not going after the lowering taxes for all of the startup entrepreneurs, but going after things that are kind of good for the whole society. And kind of the idea is not to be the representative of the startup community per se, but to be kind of a driving things what we see that are making the Finland better for the future. And so that part is the one thing. And then the other thing is to be kind of having a lot of peer-to-peer support and networking, so that all of the things that we have learned in different companies and different venture capital outfits, that we can spread the information and are kind of helping all of the entrepreneurs to be growing faster and getting the companies off the ground faster. And I've been sitting on the board of that since the inception. But I think that in general that ecosystem has here been working well. The dialogue with the governmental bodies has been very, very good and straightforward. And it's just a question, of course, always that when you are having the governmental bodies and legislation and everything, that the things are moving maybe slower than you would be thinking, but that's how it always works.
Yeah, and this is super interesting. Like like you're ahead of us in Norway. In Norway, the past year we had something called NAST, Norwegian Alliance for Startup and Tech. It's been forming, and it's been forming about the kind of leading entrepreneurs and VC funds and people in the startup ecosystem. And it's also kind of working towards politicians to make to make Norway a better place, easier place to start and grow companies that will again add more income and jobs in Norway, etc. So it's quite interesting. So and we're actually having the first formal board meeting tomorrow. I'm part of the board, where the membership or the members elected a board last month. So we're having that kind of kickoff tomorrow. So then I'm going to ask you, so all the work that you put into this, because it is a lot of work, do you see that it has is it bearing fruits? Do you have impact with the politicians and kind of making changes? Please say yes.
Looking it from the monetary perspective, that Finland used to be having kind of the major legs for the whole society has been the pulp and paper and then the heavy metals industry, and those have been like 10 billion each. And now the startups are just about to reach the 10 billion mark. So we are together as big as kind of the old school pulp and paper, which used to be kind of the mighty industry. So in that sense, I think that there is a very big change that has been made already in the recent, or within the last 15 years. And in that sense, I think that maybe some of the people have not noticed it yet, but it's kind of a big shift that has been there. And I think that now looking the type of companies that are up and coming here, I think that they're really the renewal of the industries and on the kind of business life here, it's going to be really big, looking 5 to 10 years forward. So in that sense, I would say yes. Not going into every detail on the legislation, etc. That I think that people, legislators, have been listening very carefully what we have to say. But then the question that how to get everything passed through is another story. That it always takes time.
Yeah. Okay, good. We have the similar situation in Norway. We have the oil and gas, and we know it's going to be phased out, but we kind of not really leaning into the startup ecosystem yet. It's kind of we have all this oil money, right? So it's not that rush in Norway.
But aren't you quite diverse now when you have the fund and it's invested into every company in the world?
Yeah. But it's kind of, that's a different story. Yeah. But anyway, and then we have Slush, like this, because Slush is also owned by one of these foundations. Am I right?
Or it's owned by the Startup Foundation. Yes.
Yeah. And I have to say, like, wow, what you've been able to. I love Slush. I'm going there every year now. So, and it's so impressive what you've been able to build in Finland within this, like, when it comes to the startup ecosystem on a global scale, right? So you bring together, I think, was it 13,000 people brought together last, like top founders and investors?
Like 13,000, and really I think that the difficult part there has been that it's run by very young team. So I think that Aina, who is running it, is 23 now, the CEO. And the team is really young. There is a lot of responsibility for the very young people, but I think that that's exactly why it has been surviving. That there is kind of a lot of energy. The difficult part always, also, of course, is that when the CEOs are there and the teams are like in position 2 to 3 years, so that how to make the switch and how to keep all of the tacit information such that you're really all the time keeping the high quality, and but that has worked amazingly well, and I'm so happy that people have been really able to drive it so well, and but it's all about the quality of the people that are running it, and there you go, and kind of empowering and giving really all of the power to the young people, that the government, the universities, everybody else has kind of stayed out of the way, just giving a little bit of support in the early days in a form of money and a structure, but now it's definitely running on its own.
Yeah, it's super impressive, and it's, as you said, it's quality. You go there, you know it's going to be quality, and also from a founder's perspective, having to go there and meet with so many relevant people in one place, both to kind of get inspiration and pick other founders' minds, to get inspirational talks on the builder stage or the founder stage, to meet with a lot of investors and kind of get the last of what's happening in the VC space or trends. It's very inspirational, and it's impressive what you've been able to build it kind of in Finland from scratch to this big thing.
I think that the question or the word is relevance. That kind of what happens is relevant for you. That of course, if you go into a 3-day event and you're sitting in the airplane outside, going back home, that if you're little bit having a headache and you had a really good party, that's a good thing, but I don't know if that brings you back the third time. That you really need to be having the good discussions with your peers and with whether they are investors or startups, and then you need to be having a lot of relevant content. And I think that that's something that really has been there from the day one, and I think that now more than ever.
Yeah, I agree. Okay, I can see that we're closing up in an hour, so I just want to kind of pick your brain on one last thing. Like since you're here and we have the kind of founders listening into this, so if from being an early stage VC, have you seen everything you see? You look at all these pitches. is there any things in particular, like what would be your top advice that you would share to founders listening into this talk?
So difficult questions to distill
Yeah,
in
it's broad.
few words.
Yeah.
But first of all, I think that the kind of the show your ambition and kind of do what kind of makes you tick. I think that's kind of that when the content is right and you feel at home, then that also radiates to other people. Then totally other thing that we touched already, that there is life outside of the AI bubble also. So if you're not sure what to do, instead of thinking yet another AI wrapper to some LLM model, go to your local university and talk with the professors and find some fascinating science that you can turn into crazily good products or something else. There is so many opportunities around, but you just need to be looking far and wide. And then I think that the key thing also is that seek advice, ask the questions, don't be afraid. There is no stupid questions. Just kind of try to pick the brains of the people that have been around in the area that you're interested. Most of the people are really willing to share their ideas for the young entrepreneurs, or well, it may be the more seasoned entrepreneurs, but kind of you just need to go and ask. And I think that that's so many times overlooked. Many of the best entrepreneurs that are most successful, they are the best people to ask the right questions.
I agree. I've seen that, and heard that before. So those are some great advice. Thanks, Ilkka. Thanks for joining me for the chat. I really enjoyed it, and I'm sure our listeners will too. Till next time, I wish you a great summer.
Hey, thanks for having me, and definitely the same thing. Have a great summer.
Thank you.
Thanks. Bye-bye.
Bye.